Hello and welcome to the weekly wrap video. Just a couple of things to brief you on from the past 5 trading sessions. It's been a relatively thin and muted trading week due to the continued proximity in towards the year end and the Christmas holidays, as well as traders making the decision to sit on the sidelines ahead of the last key risk event of the year, that being the FOMC rate decision next week on December the 18th. So much of the market fluctuations have been in regards to better or worse data in the US as we continue to mount in towards the FOMC rate decision just in the next coming days. So we did see some very strong retail sales numbers this week, and that's allied with the 5-year low we saw in the unemployment rate as part of the non-farm payrolls report a couple of weeks ago, does lay the ground for a potential taper from the Fed on its quantitative easing program. Additionally, on the political side of things, the US Democratic leader Murray and the Republican representative Paul Ryan have struck a tentative deal on the budget, which is due to be passed on to the Senate next week. Should that pass through, that also does clear the way for the Fed to taper QE without any fiscal uncertainties. And then over in the Eurozone this week, we have seen continued resilience in the single currency. That's despite the continued imbalances in the monetary union, as banks in the Eurozone take the opportunity to bring forward their repayments of the ECB's LTRO cash. That's as they temporarily suspend such repayment operations for around 3 weeks, due to resume in mid-January. As such, the euro currency has been supported by the continued contraction in liquidity as banks also look to clean up their balance sheets ahead of the asset quality review from the ECB. Back on the topic of the Fed then, we did see a New York think tank report in about the midpoint of the week, which did suggest that the continued strength in data does really bring a lot more reality to the fact that the Fed could finally trim their asset purchases after some see them having missed the window back in September. So that's continued to likely take the focus as we progress over the weekend and heading through into the final trading days of 2013. So of course I'll bring you all those releases, that key one of course being the FOMC, as soon as it hits the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic rest of the day.